never done this before. I'm a virgin.
What? What do you mean?
I'm a virgin.
You're a Virgo?
I'm a virgin.
Oh, that's kind of hot.
Yeah. So wait, you're recording right now? Because did you get that call from Kenny though about the thing, or wait, we're sending this?
Stick to the script!
Sorry.
God damn it!
All right, you want to talk about SPY? All right, cool. Let me pull up the chart. All right, I'm looking at SPY.
Yeah.
Daily.
So I think we're going lower on SPY.
Yeah, I think that
way.
Like how low? Okay, so
oh, that's freaky. Oh, that's so freaky. Dave, stop it! Dave! It's all fractals. It's all fractals.
Holy shit, man!
It's all fractals.
Damn, that's crazy.
Look at that sine wave. I told you it's all fractals.
Dude, I've never seen anybody do that before. It's actually smart.
Dana, I need you to base rape Darude Sandstorm and then deep fry this. I told you it's all fractals.
Dude, I've never seen anybody do that before. It's actually smart. Wow. Oh, you still use these terrible colors.
Bro, these are custom. Fuck you. I almost feel like if we go to the 707, I think that would be a convenient base for it to take hold at. Like, what did it do after COVID? Where did it land at on the fib? Like, if you were to take the trend from,
I mean,
right before they pulled the rug.
It kind of depends, but like, so say, I mean, you'd probably say this double bottom would be your measurement point. Like just a basis. I mean, they all work, right?
Yeah.
But this would be like your start of a new uptrend here, right? So this was 2016.
Sure.
January. So yeah, you got almost a 786 on this. This is log fib though.
Yeah. I guess what I'm wondering is like, if we had a rug pull like with what happened during COVID.
707 pop right here.
Okay, so 707 would be
on log, yeah. So like, let me take it off a log right quick.
You can stay on log. I was just pointing it out because of
you didn't point anything out though. You just said I'm not trying to be toxic, but take it off a log.
David.
That's what you said, dude. Yeah. So I mean, yeah, log is better. See, because standard doesn't do anything. Linear. If you were linear, you would have not been able to get the bottom of this move.
Sure.
And if you were in log, holy shit, you would have gotten it perfectly by buying the 707. I mean, obviously, you can't really tell exactly what fib it's going to stop at, but you would have literally bought the exact bottom if you would have bought each fib.
Sure.
So log is still better. Yeah. Cool. All right. Thanks.
Fuck you. Okay. So I guess, like, where are you expecting it to go to? Like the 707?
Like right now?
If it were to rug pull, where would you think?
So if we're talking, okay, you're talking about if it were to rug pull. I mean, realistically, like you got a long way to go, dude. We're not in a place where we haven't even created a newer low yet. So first of all, right, we haven't created a lower low. So none of these conversations even really matter until that happens. Now, you've broken a few trend lines. Yeah, sure, that's fine. But at the end of the day, you still have the ability, and we've seen SPY do this so many times, to come here, level out, and then find a new base, and then climb from there. I mean, you would say the most common retracement would be the 618, which would be 295, which would be horrible. I mean, people would be in a lot of pain. This COVID thing right here, I mean, it happened relatively quick compared to other, historic crashes.
I kind of feel like the stage is set for that, though. I feel like with like the fundamentals of the market that it could even go lower than what COVID did, because everything's just been a Band-Aid since.
So think about this, though. And I mean, me and you, we've talked about equity markets and stuff like that.
Yeah.
Versus the dollar and everything like that. But just consider the idea that I just feel retail is so aware of those economics that it almost makes me hesitant to think that
like a reverse rug pull.
Yeah, like
me too.
It makes me think that okay, let's get back to it, right? Because what are we actually talking about here? We're talking about... Actually,
no. You make a great point, because I was thinking about this the other day. What market makers can do, as well as hedge funds, is they can stage rug pulls in reverse. I don't know that people
Absolutely.
Like, especially if you see retail flooding in on the short side, if everyone's buying puts.
Dude, they are. Look at Twitter right now. Twitter
I stayed out of position. I stayed out of positions this week just because I felt like that was on the plate.
No, yeah. I mean, Twitter, people are just like, dude, every day trader Twitter right now is just destroying right now, just flooding puts, dude.
Right.
It's easy money. It's easy money right now, dude. So I think that at this point, from a broader market standpoint, what does that tell you, right? So now you're getting the larger scale adoption of retail coming into the options chain, and they're finding ways to make money. Now, granted, I'd say that most retail is still losing money, especially on shorter term options, right? But whenever you have a trend like this, it becomes really easy because now all these people who are like, I'm buying the dip, like they've gotten burned enough times where they're like, nah, fuck. So now they've bought low risk put positions and fucking banked 200% on them or something like that. And they're like, oh shit, like I'm just going to buy puts.
Right.
So that kind of energy is what makes me think, okay, like, yeah, it's bad, but is it really that bad?
Sure. And even
is it really?
Take a look at my screen real quick. So this is an indicator. I think it's just called SI, I think, but I have to look up short interest.
You know what it is, though, just while you're doing it? We've broken the 618, the 446 on this most recent move.
Yeah.
When we broke 445-ish.
Yeah.
And that was kind of it's... Like, that was when I feel like that's the cascade of retail, right? When we did this move right here, when we broke through here, I think that's that psychological level when everybody was like, oh, it's just put season. Like, we can just buy puts.
Well, the number 450 as well. That's very psychological.
Right. Well, that's what I'm saying. So you broke through 450 and then you just... everybody's like, oh, yeah, you're going to bounce. And then you just blasted right through 445 on the next open.
Sure.
It's like... Yeah, like today was really that day. I mean, think about it, man.
Right.
I don't think any retail people who are paying attention on Twitter right now lost money today. Think about it that way.
No, agreed. Yeah, that's a great way of.
I don't think anybody lost money. And so what's the psychology going into next week? You're sitting right here on this 786.
Right. Well, also, if you look over here, so I'm looking at the short interest on SPY. The short interest is actually in green. So I took the gray line out, which was just average volume, but it still lines up. It's the same thing. And it bounces between this channel. And for the past however many weeks, I mean, pretty much since March of this year, or last year, we've had this really interesting curve taking place. And now we're topping out. And look what happened the last time we topped out of this channel. You had right here starting a V-shaped recovery. Classic SPY doing its thing.
Right.
And then on top of that, now you're finding yourself in a new channel. And then look at the market profile of that. So we found the bottom of this profile right here. Everything from 422 up until 446. And we found ourselves right here at the gap fill.
Yeah, you're on the floor.
So, and I think that considering the gap fill, considering the fundamentals and the narrative of what's been happening, I don't think, the last time we were at the top of this channel was on short interest was right after COVID, which puts you right here.
Yeah. Yeah. So what is, I don't know, man.
And then you had the steady decline. And when you found yourself at the bottom of the short interest channel, you had another reset.
Yeah. And are we that bad right now? Is the economy in as bad a shape as it was like right when the COVID collapse happened, like from a fundamental narrative standpoint? I don't know. I mean,
but then we have this giant pocket right here at 370 down to 340, but also from 427 down to about 400.
I feel like that might be saved for later.
Agreed. But so, even just the symmetry here, like look at the congruency of these two volume shelves.
Right.
Yeah.
I think that my bias, if I had to give a bias, it's strictly just based on, I just don't think that retail is, I don't think that retail is savvy enough to be this to be this confident at any given moment in the market. You know, like that's just kind of my psychology surrounding the market at this point. You know, like I just can't just dive into that sort of narrative. And yeah, this is the most significant. I mean, it is a significant drop though. Like I'm not trying to discount it, because the last time we're at like 9% now from the all-time high.
Yeah.
The last time that you had 9% was
Could you zoom in a little bit?
November of 2020. So it has been quite some time. Wait, where was I? Oh, look,
November of 2020.
November 2020 right here. So 8.88%.
Even the volume, like look at where the volume reached down at the bottom. Like it's that classic signature.
What do you mean?
Go to the weekly chart.
It has this. It just kind of the volume interest just comes in right at the bottom, right? Like it swoops in at the last second.
Right.
Yeah, I don't know. I mean, look at this weekly candle though. Holy, wow,
yeah.
That is impressive.
Last time we had that was February.
This thing ain't got no wicks. Nothing. It's just like, nah. Nope.
So what do you think for the week? I'm thinking V-shaped recovery, honestly. I think that's
weak for the SPY. Yeah, I mean, I've swayed you pretty heavily here because you well, I don't know. You didn't really give your opinion on the week, but you were saying like, you know, you thought that the SPY was going to go much lower.
It's very much 50-50.
I think that this is what I think is most likely. I don't know about like this coming week, but I do think that you approach the 500-ish zone before you go below 400.
Yeah, I agree.
Like that is my general sentiment. I mean, I guess I'll just I don't know, man. You are sitting on that 786, so what you could do is futures could open red. I guess this would be my just from my like basic kind of standpoint, like how I don't know, man. You're underneath the 786 right now. You very
that's only
well
how Phipps
could.
play though. Look at that would be October. Look at October where it was touching the 885. It dipped right below it. No. Do Control Z. Keep it where you had it. Yeah. Look at the 885. See how it dipped right below it?
Yeah.
I think that's I feel like that's market makers sampling liquidity towards that area. Yeah. And that's typically where you see the most aggressive reversals is when they've tested that and then they realize, okay, this is not advantageous.
Yeah. So you're looking, you could see, I mean, I'm not saying you're looking for this move necessarily, but that does make sense that they would come down, I think, test liquidity at the end of the week and then just kind of go, okay, yeah, let's just pop back up. I mean, this is just so intense, you know, at this point, this is just, it's just sliding down. I just don't.
Well, even then, look at like tech. Look at NVDA.
The options chain. It just doesn't make sense, you know.
Yeah.
For market makers to just allow it just to be this easy on retail, you know, like, oh, look at that. That's
Josh, Lucid Trade, aka Josh, was talking about NVIDIA having a really, 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 really bad looking options chain on the long side of things back when it was at like 280. He made that call like 2 weeks ago. I wish I held my NVIDIA puts because I'd be up at least 500% right now.
Mm-hmm. Yeah. No, but look, man. I mean, this is a
707. Yeah.
Sitting on top of a fib right here.
Yeah.
Dude. Yeah, I don't know, man.
I feel like it's going to reverse. I feel like
it could.
Here, look at that. No. Look from hold on. Stay right there. You're on the daily. Look at this. Go to my screen. You have the same form of it almost looks like they're entering into accumulation, but you can see the same pattern showing up of here to here with your giant failed cup and handle. And then I feel like we're coming around here. I see a rejection at 300. This is demand, this is supply. So I feel like they would distribute up until this point, and then you have a surplus, so they're going to want to pull it back down, reaccumulate. I don't know. I really feel like
the guy like spitting something out.
Fuck. What? Shit. God damn it!
You Brad Pitt?
Oh, fuck. Oh, god damn it.
It's okay. Don't worry about it. Yeah, I don't know. I mean, I'm not gonna lie. I mean, I swung some. I would prefer those puts to just continue to, to print for me. But I mean, it is a pretty convincing case that you're gonna see some sort of bounce.
Look at
some sort of bounce.
Look at the short interest up here. Look at this. I mean, it's this. This is your top. Here's your what do you call it? Right here.
No, yeah, you have an uptrend.
Tons of symmetry there. I don't know.
Yeah. No, so yeah, I mean, look, we're saying all this, but obviously you're still in a bad state. You have very high volume sell-off occurring, right? Mm-hmm. So you should be cautious. But I will say that probably I'm not the only one that is swinging puts. Mm-hmm. You know what I'm saying?
Yeah.
And they know that, and so I mean, they could just say, you know what, let's just eat up some of these puts, right? Swing SPY up back to like 450 or something. Make it look strong, look like it's holding levels or something, and then send it back down. But I do think that my bias is probably that you're gonna see a swing to the upside before you see further downside, just because this is just so unsustainable. Like if this was upside down,
Alt-I is how you do that.
Yeah.
That's a cock and ball.
Yeah, I mean, if this was happening like this, you'd say, okay, yeah, you're gonna have to come back and retest.
This is actually a really interesting perspective. I do this a lot. This is what it looks like to be a short.
Yeah.
This is what your P&L would look like.
You wouldn't know anything about that, would you?
Shit.
But no, I mean, this just looks like it needs to be revisited, right? Like you have all of this blank space right here now that you just kind of blasted right through. It's like, okay, what's the common sense thing for the market to do? It's not just,
it'd be like a cup and handle. It'd be like a cup and handle as a short.
Yeah, it's gonna go, okay, we're gonna do this,
right?
If we're gonna see continuation,
which is just accumulation upside down. That's your
this is accumulation. Yeah, that's what I'm saying. So yeah, I mean, yes, this looks like it wants to continue this way, but first it has to revisit and create some liquidity, right? Like you have to create some sort of trading. You can't just go down forever. Is there an EMA there? Alt-I makes that so much easier. I've never I mean, you've absolutely crashed through.
What's the oh, you got the 200. Yeah, can you go to the daily?
Oh yeah, I'm on 4 hour. My bad.
No, you're good. Look at that.
Yeah,
bounce right off the 200.
Bouncing. Yeah, you're bouncing.
Yeah,
you're definitely bouncing.
Yeah.
Futures are probably green, honestly.
Yeah.
You're like, it's gonna be too late. You're just gonna gap up probably. My puts are just gonna be eviscerated. You're gonna do this. You're gonna retest this sort of 450 range.
Yeah.
That would be my bias. And I mean, look, I mean, that's my bias. But some sort of news comes out. Composite Man does his thing or whatever, and just wants to send you.
Right.
I mean, you get sent. Like that's what he does. He's not. This isn't like, you would have said the same thing here. You'd have been like, dude, this needs to get tested out. You need to. But even here, though, look at this. This is COVID, right?
Sure.
Even here.
Yeah, your Elliott wave.
You had to.
Yeah.
Right? Wait, hold on. Oh, fuck. I don't even know what I'm looking at anymore. Hold on.
Oh, it's upside down. That's upside down.
Yeah. So this was
flip it.
No, I get that. No, I'm doing that on purpose. See,
and that's what's the most hilarious part is go back to that. No, zoom in again. That looks like distribution, but that's actually accumulation. That's the beauty of Wyckoff is that the patterns are. Yeah.
No, they're literally just the same thing, but upside down.
Yeah.
You take those schematics.
Yeah.
So, this is the juicy stuff, right? You take those schematics, right? Oh my goodness. Why was it that crooked? What the? All right. Oh Lord. Oh. Okay. I got it now.
Do you?
So you take the schematic like this,
bro.
Right? You get a
Tell your daughter to get off your computer. What the fuck is this?
Right? And then the distribution is just...
Yeah.
It's the same thing, but it's inverted. It literally is, man. I know.
Was it you back when I was streaming all the time in like July, where I was digging into the fractal stuff more? Was it you that said this is all Wyckoff?
Yeah, probably.
Because I intentionally did not look into that so I could preserve like the organic discovery that I was having.
Yeah, no, it is. It's all the same. It's all the same thing. What I will say, this is another thing though. So let's talk broader market though, because now another thing is Kramer is over here touting the economy and saying that it is going to reverse, which does kind of freak me out. He's also saying that crypto. He's saying that crypto is going to be coming out, like money is going to be coming out of crypto and into the stock market.
So, do you ever use anchored VWAP?
No.
You should. So here's what's funny. This is how you can start to see like footprints of institutions. So I put an anchored VWAP at each of these bounces, right? Mm-hmm. And you can see them go into the present. Look at where all these supports and resistances took place. So maybe there's more room on something like NVDA, but this is where someone bought in, someone bought in, someone bought in, someone bought in, and then they're each distributing at their own pacing. But the residual effect of that, whatever is left to distribute or whoever is looking to accumulate along that same gradient, you can see take place in the present.
So let me just try and understand that indicator a little bit better right quick. Anchored VWAP is obviously it's linked to a certain price period.
Mm-hmm. You just pick a point in time.
It's weighting the volume. So whenever you get a big spike in volume, is that how you're deciding where you're anchoring the VWAP? Or?
So it stands for volume weighted average price, and basically what it's doing is it's tracking for all the volume that's coming in, what is the price being averaged at based on volume. So I guess the way you can think of it is kind of like efficiency of purchase power. If you can buy a ton of shares without moving the price much, you actually have a ton of efficiency there. Your VWAP would typically, I don't know, there's a ton of different ways that you can put it through a lens, but it's the metric that institutions use to measure kind of the best bang for your buck. Like typically, you know, if a hedge fund calls up a prime broker and says, hey, I want 100,000 shares of VWAP, you know, with slippage of plus or minus 2.5%, that's what the industry goes by. So that's why you'll see VWAP be so respected, because someone could also be shorting at VWAP. It's what everybody goes by. It's this metric that combines the value of how much volume is coming in with price. So if you have a ton of volume coming in and the price isn't moving much, your VWAP would stay steady. But if your price can move a ton with little volume, then VWAP is typically, I think it would go down. It's all dependent on the direction, but you're merging the value of volume and price and making an aggregate. I hope that made sense.
Yeah, no, I mean, I generally get the idea behind VWAP. The anchored VWAP is a little bit different, but...
Oh, so I'm sorry.
You decide the times for...
Yeah, it's this tool right here.
And so what you're doing is you're saying, I want to click this time because that was a bottom.
Right.
And then I got you.
So I can see what the value of an institution's buy-in is from where the bottom took place, and then see where it holds up in time. So like this one at the very bottom at your 122, I'll put in like white. So this guy that bought in at 122, this is his true value, quote unquote. After that, I'll do, I don't know, gray. No, it's hard to see. I'll make the thickness bigger. Edit that out, Dana. Shut up. But then you see this guy here, and then I'll make this one in cyan, and then this one in green. So now you can see historically, like, of all of this buying power that is of fucking gargantuan mass. Dana, edit that out.
Like gargantuan mass with a lot of volume.
But you can see like where their position as a bank or as a prime broker, like where that holds today. And they'll actually play off of each other's entry points based on that. So like I circled where each of these major buy-ins took place historically and where they're at now. And that's where you're seeing supports and resistances come in. So, you know, this guy in green, which took place at this point, his position would now be in the red relative to what institutions go by. So right here, green and green, you know, and then look what happened when this candle recovered, hit the high.
Checked off.
Right. So I'm assuming that's somebody closing out their position. And of course, it was probably a micro distribution taking place right here. See?
Yeah.
Right here. And you can see it. Here's your top. And then it looks like accumulation happening after. And then it continues to accumulate.
Yeah, it's more like redistribution. But yeah, no, I get the idea. And by the way, redistribution and accumulation are very related to each other. That's why they can be tricky. I want you to look at my screen right quick.
Sure.
What do you think that this looks like it's about to do?
Test an SOS. But that's upside down. Yeah.
Yeah. This is Amazon.
It's an SOS in reverse.
And this is the weekly chart, by the way. So
that's heavy distribution, yeah.
This is since June of 2020, essentially.
Bear flag, reverse SOS, whatever Wyckoff calls that. Yeah.
Yeah, so this is a...
or is it a part of a giant SOS? No, zoom out. Go to the monthly.
Hell no, dude.
Nope.
Are you kidding me? No, dude.
Go back to the daily. Yep, gap fill.
Yeah, I mean, this is, I am getting rid of my stock.
Right. Which Bezos did do this year, I think, or last year. He sold a huge portion.
Yeah,
him and his wife split, and she sold shares.
Yeah, it's...
Which I guess he wouldn't.
Yeah, so you kind of had this jump in volume that kind of came with...
no, but look what it's doing.
Here.
Look at the end of 2018 to the COVID bounce. So can you do vertical lines real quick? So right before it fell off in 18, yep, click there, and then do the reversal at the end. Does that not look like the same thing happening from October to April, of April to now? I mean, even the volume kind of looks like it's matching, which, I mean, obviously there's dividends and earnings and all of that would prompt for patterns, but...
What you're missing here, you're going to need then to kind of,
You see what I mean? And like, if you want real confirmation bias, go to Heikin-Ashi.
So look at this, though.
The COVID era was a bit more vertical.
Look at this, though.
Yeah, giant accumulation, yeah.
These are accumulations, but these are almost inverted.
Right, good point.
They're like flipped.
Why does everything look like it's fucking flipped? It's like they're undoing
they're
the
like
entire
biased.
COVID recovery.
They're like biased. Bias is to hang higher in this trading range, and it's to hang lower in this trading range.
Touche.
Right. And so, what do you want the price? Do you want the price to be higher?
Right. Good point.
Selling, or do you want it to be lower
point.
when you're buying? Right?
I never thought of that. Great point.